Okay, thanks. Now we've got Adam Price from Voucher4, who's going to talk about retail investment markets.
Great, thanks Eddie. I've been working in retail financial services and wealth management for the last 10 years or so. Here to talk tonight about an area of the market that's captivated my interest at least for probably the last 5 years or so, and that's the retail investment market and how it could and should embrace digital technology. Just to be clear, what I mean by the retail investment market is products like ISAs, SIPs, pensions, those types of products invested into anything from funds, ETFs, stocks, shares, gilts, bonds, all those types of things. And by the retail market, I mean the likes of you and I buying these products as opposed to companies and institutions. This is my very simplistic perspective of how the retail investment market looks pre-internet or pre-2000. I appreciate the internet came along slightly earlier in the year 2000, but do bear in mind I'm talking about financial services here. In my opinion, tends to be a little later than others' adoption. Basically, consumers pretty much had two fundamental choices if they wanted to buy a pension or investment a few years back. One, they could either go to a stock brokerage, where they could ring up a stockbroker, purchase an investment of their choice, but not get any advice, or at least they shouldn't get any advice. It's very much an execution-only service, whereby you, the consumer, should be sufficiently informed to choose what you wanted. Or they could go to a financial advisor of one shape or form. This could be a life insurance company, such as Prudential, is the example I've used up there, who would have salesmen, perhaps going back a little while, door-to-door salesmen. They would be there to advise you on their products or sell their products, depending on your perspective. Or you might go to your bank, meet your bank manager, who likewise would sell you from a restricted choice of products. Or you might speak to an independent financial advisor who would advise you across all products in the marketplace. The key with all of those is it was very much a face-to-face service with another person. Rolling forward a few years, online came about, digital came about, and it's fair to say if you look at these two markets separately, the stock brokerage market certainly has embraced digital. Nowadays, if you want to buy stock, shares, funds, etc., you would be highly likely to go online onto a Hargreaves Lansdown or a Fidelity's fund supermarket, a website such as that, and you would pretty much do the whole thing online. You'd buy the funds, the shares, you'd log in later to see how they're performing. On the other hand, the advisory market, it's fair to say, probably hasn't embraced digital to the same extent. It's certainly got stronger in terms of the quality of advice that it gives. Advisors are becoming more qualified, there's higher regulatory standards. But generally, things will still happen in a face-to-face environment. They might bring a laptop along to show you various forecasts or options that they've generated, or it could be over telephony as well, so technology has been embraced, but certainly not to the same extent as in the brokerage market. Where I think consumers are today, though, is very much in the bottom right-hand corner, and I think that's where the entrepreneurial opportunities present themselves. Consumers today expect fast, efficient service online. They expect to receive advice online, through tools, through communities. They aren't particularly used to going through a stock brokerage type experience where, in my opinion, really to be using that type of service, you should really have done a lot of research. Financial advisors at the extreme pretty much have a degree's worth of qualifications. An execution-only service really isn't the sort of thing that you should spend an hour investigating and then dive into. But today's consumer doesn't expect to spend months and months researching financial markets before they invest. I guess to use an analogy for that, if you think about healthcare nowadays, I don't know about you, I certainly, if I'm feeling unwell, the first place I'd probably go is NHS Direct. I expect through that sort of decision tree-based approach to get a fair idea of what was wrong with me. I might then go on to a couple of different forums to get a bit more social media input and community input to it as well. And then depending on what it was, if it was in any way serious, I would go to a doctor. But I would go to a doctor with some hypotheses about what's wrong with me. And you as a consumer, that's how I expect to integrate my online experience. Now, before I go on to the next slide, where I'm going to talk about some of the specific opportunities that might exist for entrepreneurs in this space, I should caveat I don't mean to patronise the market. This space is very hard to get into on at least a couple of fronts. One, it's complex. Trying to codify the things that financial advisors think through and work through when they give financial advice is not simple. It's not beyond the wit of man, but it is complex. Second, it's a highly difficult environment. And third, moving into this space would be a massive move for a lot of these players. Particularly on the advisory side, it's a big threat to existing business models. It's not something that should be done lightly, but I do think there's opportunity there. So, this is a slide that talks about what those opportunities might be. The previous slide I first wrote, I think, in 2006, or a version of it that's more professional, it's in a corporate environment. It's only really now, 5 years later, that I can start to populate a slide showing different startup companies starting to sniff around this space. And I've drawn out 3 different models that I've at least seen, and there may be more out there. The first I've called the virtual advisor. This is like the NHS Direct, if you like. There are now business models out there at startup phase, and at least one of those is still not even yet in private beta. And these models are attempting to codify what a financial advisor does. So you as a consumer can go online, fill out the questionnaire, give the tool an understanding of your situation, your assets, your liabilities, your attitude to risk, your future income, your future spending requirements. It can then work out how much money you need for the short term, the medium term, and the long term. It can understand your attitude to risk. It can then make asset allocation recommendations on what types of investments you should have, and then actually recommend specific products, typically ETFs. It can construct that portfolio for you, it can monitor it, and it can report against it in the extreme version of the vision. That, as I say, that's not easy, but that's coming to the market now. Would it replace advisors? Different opinions on this. I certainly wouldn't even attempt to answer that without saying in the long term. Personally, I don't think it will. Just like I don't see NHS Direct replacing doctors. Rather, I think it will make the market more accessible to consumers, bring more consumers into the market, raise the expectations of consumers, so when they do speak to financial advisors, it's at a different level than it is today. I will come back to the second one, but mobile advisor. This is less ambitious as a category in its scope, but perhaps more achievable. I guess at the heart of this is a recognition that financial advice used to be something provided very much on a local basis. You might live in your town, speak to people in your town, get a recommendation of a financial advisor in your town, meet with them, and it was all very localised like many industries. And like many industries, that's no longer the case. Geography isn't the boundary. We live in one town, we work in another. Our social network is all over the place. And likewise, technology means that we don't have to interact with advisors that are down the road. So in this space, we've got a whole series of startups that are helping the financial advice industry in that context. One is Melbourne, so Vouched For launched earlier this year in June. We launched a beta. We're like a trip advisor for financial advisors. So if you want to know which financial advisor you should speak to, you can go onto that website, see what past users and clients have written about them, and use that to help inform your decision, better from a consumer's perspective, from an advisor's perspective. You've then got startups like Virtual Advisor. I don't know if Ian is here tonight. His business is looking to enable remote conversations between advisor and client, such that through things like Skype you can be having a conversation, you can co-browse, or you can see the same thing, the same screens. Thus far that doesn't sound too unique, but what makes it unique is how it overcomes some of the regulatory hurdles to distance selling. And apologies to him if I've done a disservice there, but that's my understanding. You've then got various planning tools. So like the tools I explained in the Virtual Advisor, these would be tools that the advisor could use with their clients. Perhaps ask the client to complete the fact find exercise themselves at home, and then come in to speak to the advisor about it. Again, more efficient at a lower cost. And likewise, there's a new business called Finantics, which is bringing these planning tools into the tablet environment, helping advisors when they're on the road to engage consumers through digital media. You've then also got wrap platforms in this space that now provide the advisor to explain what they are, they're like a fund supermarket, if you like, where you can buy funds. You can also see a consolidated view of what's happened with your investments, but they're available today predominantly only to advisors. They're becoming better and better. There was nothing like that before they existed, and so it hindered advisors. They're getting better and better. Increasingly, clients have access to them. So you can imagine, or I can imagine, these various different models coming together and allowing an advisor, an independent advisor in a small firm, to offer a service much like the virtual advisor in the top row there. Finally, social advisor. This is the wackiest of the three concepts and the least developed, i.e. there's only one example I can think of to put up there. But nonetheless, I think it's an interesting concept at least. Going back to what I was saying earlier about healthcare, as I said, I don't know if it's just me, but I at least now go into various forums online when something's wrong with me or my child. I see if I can pick up ideas about what it might be before I see a doctor. Likewise, I go onto Money Saving Expert and other such forums, and I see people saying, I've just inherited £500,000, what should I do with it? And I cringe. But fortunately, actually, in the answer, someone says speak to a financial advisor. And in fairness, there's some other sensible things there. But the point is, people want to engage in that way, rightly or wrongly. I guess the question I would pose is, how far could that concept be taken? What could an entrepreneur or a company do to meet that need, but where someone like me would be comfortable? I was actually down to pitch something today, and it's not so much a pitch, but more a thought starter, and it is in this space. And I guess the question I would pose is, what would a Facebook of finance look like? I.e., we use Facebook today to engage with our friends or our friends of friends, and we listen to what they say because of that social connection. We use Twitter to engage with people of similar interests, and we use LinkedIn to engage with people of similar profession. In an ideal world, who would we want to be engaging with online about their finances? Would they be people with a similar financial situation to us, similar attitudes to us, similar level of expertise, or ideally a higher level of expertise? What would we ideally choose? Would we do it? The one very interesting model I have seen in this space is co-investor, which what that does is allow you to see how other investors' portfolios are performing, and then if you like them, you can follow them, as in you can have your investment, your portfolio money invested into the same things that they invest in, and for that the original investor receives a kickback, in effect, money flows from you to them, which I find it fascinating as a model. I wonder if one day something like that could actually replace fund management as we know it today. Does it in effect do to fund management or things like Zopa threaten to do to banks? They take the institution out of the peer-to-peer lending. Could this take the institution out of the creation of funds? Again, I don't know. I'm just here to present some of these ideas and potential opportunities and help us think about this space. So that was it, really.
Thank you very much, Adam. Thank you very much. Really interesting.